Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Guys, today's bounce was not good for the Bears. Not at all. Looking like a bear trap. Yesterday looking like a bear trap, guys. Especially, remember how I told you guys the 20 DMA could slope up? Well, look at that. Now when you look at it in this context, in hindsight, you can see it looked like the dip buyers bounced off the 20 DMA. They look like they bought the dip there, guys. After today, the bounce, guys. Bears failed to break down the neckline. And I mentioned to everybody, you want to get bullish above 570. Above 570 was the fib level. And it was also around where the 5 daily moving average was. I even wrote here in my Discord, to be bullish, 570 and 572 must clear to put 573.5 plus in play. Bears needed to stay below 570 because we broke down that level. So when it gapped up, you look on the smaller time frame here, that green line was the 570 level. Bears could not keep the price below. Once we were up there, once we cleared 570, boom, it hit 572. That's where it stalled, consolidated, intraday correction, if you will, whatever you want to call it. But it stalled a little bit once it hit 572. Cleared 572 on the 15-30 minute chart, broke back below 572, dropped down to what, 570.5, $1.50, moved back to the downside before it decided to bounce. You guys see, we had this intraday downtrend line as well as my 572 level. What happened? Cleared the blue downtrend line, cleared my 572 level, smashed. I think I had a level around 573.7-ish, 573.5. It smashed. Level to level, guys. 2 for 2. Level to level, 2 for 2. No crystal balls. No 10,000 indicators. No Messiah complex. Just good old-fashioned following the price action. Knowing the levels and setups and trading them in real time, unbiasedly. But let's get to the daily chart here, guys. Looking like dip buys stepped up. That's what it looks like. Now, if you see this little green trend line here that I have on the daily chart, there's a daily chart which represents that SPY is flagging out right now. It's still in the chop phase, and it's coming in the form of a flag. You guys can see that we closed a little bit above that trend line. Is it a breakout? Well, I'm not too convinced just yet. Technically, that is a breakout. And technically, that is bullish. But, notice that wick, where did it reject it from? Where did it find selling pressure? Off my 1.382 fib level. 573.66 is the exact number, but I'm rounding to 573.7. So I would be more convinced that we are bullish, and I would be more convinced that we would get to new all-time highs if tomorrow we can clear 573.7. If we do, the way I told you yesterday, we get above 570, get bullish. It's the same situation for tomorrow. We get above 573.7, get bullish or stay bullish. We're heading up higher, 575, 576.5, and the big number at 578. 578 is a very macro level, fib level, very critical level. But it's only possible to test if we hit 573.6. All right, guys. As usual, if it's a dead cat bounce, then support levels that were captured need to fail and break back down. You guys know I always say play it level to level. That's what I'm saying. Level to level, guys. One level at a time. If we break down 572, we got 570 in play. Can take profit there, hold a runner. Whatever you want to do. But 570 fails, we can expect more downside. Either hold on to your puts or get into some puts. Get back below 570. I would be a little more bearish, favoring another test of the 20 DMA. Okay? And then below that, the neckline or the big critical buy zone at 565. You guys can see we cleared 565. There's that blue line, that royal blue line right there. Cleared 565. Treated 565 as support not once, not twice, but around 3 times. That 565 level is critical. I know I'm sounding repetitive, but consistency is a great thing. Okay, motivation keeps you going. Consistency and discipline keeps you growing. And we want to grow. We want to grow our account. Got to be consistent. We don't go short unless we get a false breakout setup, especially on the daily chart. 572 and 570 must fail to put the 20 DMA and the 565 level back in play. Can't get really bearish unless SPY is below the 20 DMA and below the 565 level. Okay, we cleared 573.7. Guys, new all-time high incoming. Let's get some green P&Ls tomorrow, guys. Triple Q. I mentioned if we clear 485, get bullish. We cleared 485. I mentioned we cleared 487. A bottom could possibly end. Today we cleared 487. Do I think a bottom is possibly in? Yes, as of right now, yes, if, because it's not based on feelings, it's based on logic, so I got to use an if statement. I am bullish in favor a bottom is in on Triple Q as long as Triple Q can stay above 487. Okay, we broke out of 47, invalidating the head and shoulder pattern. We even closed above 489. We're below right now, but overall, 47 is that level that Triple Q must stay above to be bullish. And if it does, 489, 491, and 493 plus will be in play. Speaking of 47, if that fails, that's when I will get back to bearish. That's a false breakout setup. I don't call tops, I don't call bottoms. But if I am going to call a top, it has to be based off a false breakout or an exhaustion gap setup. A false breakout would need 487 to fail as support tomorrow. And if it does, I will switch back to bearish, playing it level to level. No greed approach. This is a no greed approach. Some of y'all want to get rich fast. Some of y'all want to get rich quick. But trading is a get rich slow scheme, not a get rich quick scheme. Trying to get rich quick, you're going to burn out. You're going to get smashed. Got to focus on discipline. Got to focus on the process. Focus on the process. Growth mindset. And if 487 fails, that's when we want to get bearish. 485, 43.5, 482, and 480-ish would be all in play. Okay? Look to react. Stop trying to force the price action to do what you want it to do. It doesn't work like that. So stop doing it. NVDA. A lot of people were telling me the stock's bearish. Wrong. The price action said the price was bullish, and I am so grateful to my Lord and Savior Jesus Christ that I followed the price action. Jesus taught me to be a good follower, and it's positively affecting how I trade. I tell you that right now. I swear. And right now, we cleared 131.5. Everybody know. I told everybody. We clear 125, you get bullish. We clear 130, we continue to get bullish. We clear 131.5, we continue to get bullish. Look at that. Smash my 133 level. Got a little bit higher than that today. So what is the last critical level that was cleared? 131.5. That's the last critical level that was cleared. That's a fib level. So if we are going to get bearish and try to call a top, 131.5 must fail first to put 130, 128.5, 127, and 125 in play. Below 125, it's a break back below the multi-month trend line. It was a breakout of that trend line that made NVDA bullish, gave us this nice, beautiful move to the upside. So breaking back below would be very bearish on the higher time frame. If more upside is the plan, 133, 134.5, and 136 are targets, and also must clear to possibly send us all the way back up to 140 plus. Okay, guys? Simplicity, baby. Speaking of simplicity, Tesla. A little choppy day for Tesla today. So do we see here. Big body green candle, followed by a doji. Okay? Now, rising star patterns or morning star patterns, whatever it's called, is usually a bullish pattern. Usually represent a bullish reversal. But seeing these two candles together doesn't always guarantee we're going to get that bullish reversal. We can also get a bearish continuation. Either way, usually the third candle is a big body candle. Whether it's green or red, it's usually a big body candle. So that tells me that there's a big possibility that Tesla's going to have a lot of volatility, okay? And as day traders, we want to have a lot of volatility. Very possible based on these two candles, Tesla's going to give that to us. So we got to know the levels and be ready. If the volatility is to send us to the downside, once again, 244 is support with 242 below. If it fails, 237 is in play, big Fibonacci level. And if it fails, we could possibly go down and fill that gap at 230. Got a big gap at 230. If the plan for the market makers is to send SPY back to the upside, then 244 must hold as support and must clear 246 and 248. I would be bull bias above 250 and 252. All right. IWM look like it's still in correction mode here. Bulls need the breakout. What would it take? Well, 218 and 220 clearing. Then IWM will get the breakout. That would be bullish with 222 and 224 all in play. If we ought to get bearish and it's more downside, 216.4 must fail. That level has been showing us a lot of evidence of buying pressure. So to show us evidence that the buying pressure or the buying orders are all absorbed, it must fail as support. And if it does, there won't be much stopping IWM from dropping down to 215 and 212.6. All right, let's end this with some dark pool and option flow. 65% of activity, which was 1.2 billion in premium, came in at 567.5ish. It actually looks like that 567.5ish area. It wasn't even hit today. So I'm a little confused where they entered. Maybe they entered at yesterday's close. Yesterday's close was around 567.8ish though. And we're seeing lots of big activity coming in at 567.58. So maybe these people got busy in around yesterday's low. But yeah, that's definitely a level to watch. Also, nothing else is over a billion. The second highest is at 573, and it was like 447 million. So for what it's worth, that's where the other level is. Triple Q, 481.88. I got a 482 level, so that's pretty close to my level. Yeah, that was over 670 million in premium. Didn't quite hit a billion, but 481.88. NVDA, guys, we use these as pivot levels. All right, remember, we use them as pivot levels. These are where the big money players are either buying or selling. Okay, they're both buying and selling. In order for someone to buy, someone has to sell. So, but that's where they're getting busy, and I like to use them as pivot levels. 492.6 million in premium went into that 132.89 level for NVDA. Okay, I actually have a level around 133, so pretty close. Tesla, 244.5. That's around where it closed today. Oh, bulls are going to need to get above that in 246 to get bullish. Okay, because below that, not looking too good. It's looking more bearish, if anything. And IWM, 217.12. All right. It's over 200 million in premium. That's where the big money players are getting active. SPY, well, let's take a look at the option flow filter for 100K premiums or above. Let's take a look at the above the ask, sweep, and out the money. If you guys ever want me to show you other filters, let me know. But you can definitely get access to it for yourself. This is called Cheddar Flow, and all my tier 3 members get access to this as well. And it's looking overall bearish. 3.5 million in premium for puts, 1 million in premium for calls. A lot of these contracts are pretty short term, couple weeks out to a couple of days out. This one is a little bit more medium term, November 15th for puts. The puts, got a few of them coming in for November 15th. Otherwise, the calls are pretty more shorter term. And it looked like they entered around 572.4-ish, 570-ish area 571-ish area. Pretty random entries. But yeah, definitely in favor of the Bears still. Triple Q, very bearish. Very bearish. It was a big pop for Triple Q today. And it was a lot of puts coming in today for Triple Q. Like very aggressive, even big in size. Are they expecting a drop tomorrow? Because a lot of these are short term. But we are getting someone. Look at this, 440 strike price, 440 strike for March. So we're getting, looking like some hedges, guys. This is 1.8 million, 2.2 million, 2.2 million. Yeah, look like some big money players are looking to hedge. Are they expecting Triple Q to go higher? Interesting stuff, guys. Combine this with the price action. Tesla's overall bullish, 1.6 million. Holy moly. Had a chop day. I'm expecting tomorrow to be a volatile day. Looking at this, it's just very lopsided. All for October 11th. All short term. Will the market makers pay all these people? I highly doubt it, but we will see. NVDA, overall bullish as well. Look at that. No money in the puts. 4.1 million all in calls. Okay? So there's a lot of big money players that's betting big money bullishly on Tesla and NVDA. And IWM is bearish. So we're seeing the indices are bearish, but the individual stocks are bullish. Very interesting stuff. So yeah, there you have it, guys. If you want more content from Uncle Charter, definitely join my Discord. Links in the pinned comment below. Other than that, have a great evening. Peace.